how much signal are you able to see at the moment in all the noise at the moment? What are you watching to figure out what happens next?
Well, there are three scenarios that are important for the global economy markets. One in which you de-escalate not only with friends and allies, but also with China, and you start negotiation. If that's successful, then you avoid the U.S. and global recession. Markets are going to be higher all over the world by the end of the year. The other extreme scenario is one in which there is a failure of negotiation, even with friends and allies, let alone with China. Then we end up in the U.S. and a global recession, an ugly one. But the more likely scenario is the middle one in which you have successful trade negotiation to de-escalate with Europe, Japan, Taiwan, India, South Korea, and you name it, but not with China. And if you don't start negotiation with China, the trade level of tariffs are such that then inflation is much higher in the U.S., there is a growth shock in China, and you can still get a near recession in the U.S. and in China that then damages the world economy and damages the market. So I think that unfortunately we're in this limbo right now. There is a chance the U.S. and China may start negotiations. If they do start negotiation, they could try to reach a grand bargain, but the ask of the U.S. out of China might be too much for China to accept. So those negotiations may still fail.
Nouriel, what's on the table here? You think about the kind of the spectrum of what we're thinking about. Besant's talking about what sounds like, as I was just talking about, Kennan-like containment of China, that we're basically going to tear the global economy into two competing spheres of influence. He wants to use the rest of the world to ring-fence China and to isolate China. In that kind of a world, how long is it going to take? How long is it going to take to get to a steady state in which we don't have the kind of volatility that we've got now? How long is it going to take to reorder the global economy into that kind of a new world?
Well, if you're really trying to contain China, it's not just a trade war, but restriction to technology, to financial activity, to investment both ways, and so on, imply a strategy of full economic containment of China, what China is really worrying about, that the U.S. is trying to prevent the rise of China. If you do that, you have a risk of a true war, because the only thing that is constraining China from going and trying to take over Taiwan, either through an invasion or a blockade, is the fact that they know that the U.S. might punish China by doing what they've done with Russia, meaning total trade embargo, no economic activity with China, and that would be highly painful for China. But if you are going to a world of trade tariffs of 145%, of full economic containment, then that leads to a trade war that becomes an economic war, that leads then to this Cold War becoming colder, and eventually a hot war in the case of Taiwan. Why should China restrain itself with Taiwan and not take it over if it is losing the global markets of the U.S.? Might as well start to do that. And it's not obvious that the U.S. is going to reply to that by breaking a blockade, because that's not just a war with China. It's not just a conventional war with China, because either side is going to either win or lose, and then it becomes an unconventional war, and then it's the end of the world. So those who think that they can contain China, I think they're really playing with fire, because that's very, very dangerous. What you can do is to do a grand bargain with China, where you do a deal where you de-risk the relation of China by decoupling in technology, because the things that are critical to U.S. and China, there has to be full decoupling, but then you do trade on everything else. We don't care about Chinese toys or consumer products being cheap in U.S. We're worried about advanced tech or EVs or semiconductors or things of that sort. So if you reach a grand bargain, then you still have a division of the world in two, but it is a technological division. It is not a full decoupling. It's de-risking what's important.
Well, Nouriel, walk us through then the levers that China can use here. There's a lot of speculation about whether or not China is selling treasuries, whether they're looking to devalue their currency further. What kind of response can we expect from China in the days and weeks to come? As you point out, the U.S. looks to contain it.
Well, there are things you can do for the domestic economy. You can do massive additional fiscal stimulus. You can do further monetary easing. you can gradually weaken your currency. But of course, with tariffs at 145, if you let your currency so much lower, then there is a risk of capital flight in spite of capital control. You can do structural reforms to reduce the savings rate and increase domestic consumption. It implies to creating a social safety net. You're already replying to the US by imposing tariffs of 125%. Of course, given the trade imbalance, the U.S. Hit on China is worse than the one that China can impose on the U.S. But then there are lots of other things. You can shut down the exports of rare metals to the United States. Most of the refining of even industrial and green metals like copper occur in China, not the production, but the refining. You can shut down that. You can go after Tesla. You can go after Apple. You can go after hundreds of billions of dollars of U.S. Economic interest and FDI in China. You can do lots of things. And as I said, you can then become more aggressive with Taiwan as well. So there's a whole spectrum of things China can do. By the way, China and Xi Jinping do not face election. Next year, there'll be midterm election in the U.S. that could lead, if there is an economic recession, to the MAGA project failing miserably. He can wait out the United States. So in the short run, China has a lot of leverage. In the medium term, of course, a trade war like this hurts China more than the U.S. because China is exporting 2% of its GDP to the U.S. If that goes to zero, it's a huge economic shock.
Well, Nouriel, in terms of the economic shock, I'm curious about, I mean, you just laid out all the levers that China can pull. To what extent is the volatility around these tariff announcements doing more damage than the rate itself, in that corporations from both sides of the Atlantic and both sides of the Pacific are just trying to work out what the number applied to some of their goods actually is? How much of that volatility and that bracing for impact is amplifying the odds of a recession?
Certainly, the volatility on top of the tariffs increases the uncertainty, and there is an option value of waiting. If you're a corporation, you may say, let me wait and see until I do more investment, more employment, more domestic or foreign investment. Same thing for consumers. But it's not just the volatility and uncertainty matters, because the level of tariff matters. I mean, if we end up with certain economic tariffs by the U.S. against China of 145%, and you're certain about them, there's no uncertainty, the economic pain is severe, regardless of. So this argument is all about the uncertainty. If we only knew what the tariff will be okay, is not true, because if the tariffs against Europe, Japan, China, India, and others remain very high, there is a huge economic and financial market damage, even if there is zero uncertainty. So it's not just an uncertainty problem, it's also the economic damage of this trade war that is a problem.